It's time for my favorite weekly segment, Let's Talk Money with Brent Wilsey. And this is so cool because the goal is to help San Diegans understand their finances better. And you break it down in a really easy to understand way for all of us. Today you wanted to talk about stocks.
Right. Hot stocks.
Hot stocks. Okay, so let's start from the very beginning. What is a hot stock?
Yep. Well, my job, I feel, besides running my investment firm, is to try to educate, inform about the economy, investing, and so forth. And I've been doing this for now over 40 years. And I keep telling people, do not buy hot stocks because it's so good. You go to the party, oh, I got NVIDIA, oh, I got this, And when you look at the history of hot stocks, and I try to give, not just say don't do it, but I try to give people examples of why not to do it. And there's hot stocks that have come out that 5 years ago, people have lost money on them now.
So what are some of those examples? So you say you want to explain to them why they should not. What would be a reason? I mean, some of those hot stocks that people have mentioned, like Salesforce, Adobe. Okay, why?
ServiceNow, because 5 years ago, like, oh yeah, they got great sales growth. Everything's going to be fine and so forth. Oh, they're going to deal with AI. A couple years ago, oh, they're going to be part of AI. So you got anything with AI you had to get into. Well, if you now look at the 5-year return, like on Adobe, you are down 43%. You've lost nearly half your money. ServiceNow, about flat, down about 1 or 2%. And Salesforce, which is very well known, 5-year return, like a negative 16%. I mean, what happens is that these companies, they come out with these great expectations, people build them up, they trade at exorbitant levels, and that the stock cannot meet the reality of what's going to happen with business going forward. So you overpay for anything. If you overpay for a car, you're going to lose money on it down the road. Same thing when you invest in a stock. We call them small pieces, large businesses. You're buying a piece of a company. Do not overpay for that company. And these hot stocks, because of the emotions, people continue to do it, and now you're sitting with perhaps a loss of 50% over 5 years.
Yeah, nobody wants that. And obviously, to get the right financial advice, they need to come talk with you and your team, really get that personalized service. But are there cliff notes you could give us now? If somebody is kind of just dabbling and learning about the stock market, what should we look for in the history of a stock?
Well, what they need to do is, and again, we spend, before we invest in any company, it's 10, 15, 20 hours of research. It does take a lot of time. So what they should be doing is researching who they're working with. Ask that person, why are you doing what you're doing? We explain to people how we do things. We have this presentation. I tell people they can do it themselves, but it's very easy sometimes in the short term. When these things happen where hot stock drops 50%, people don't know what to do. So that's why you have to understand you've got to buy that business. You have to buy a company that has growing sales, growing earnings, low debt on the balance sheet. You're investing in a business. Don't play the gambling game of stocks, because that doesn't work out. People end up losing money. They say, oh, the stock market's so risky. I tell people, oh, that's not true. Stocks have done better than real estate by far over time if you do the right things. If you buy the hot stocks, you're gambling. You're not going to do very well.
I always wish that they would teach more classes like this to young kids. I mean, if you look at like the basic math classes in school, none of them cover this kind of stuff. Do you have any advice when it comes to talking to our kids about stocks? Because my son, I have a teenage son, and he saved some birthday money, and he bought a couple stocks. He loves checking them. I don't know anything, so I can't give him any advice. How do we start talking to our kids about this kind of stuff?
What I tell people is, again, if you're going to do that, look at the longer term. And a lot of times I like to buy the hot stocks, again, because they move a lot. What you should be doing is looking at that company you bought and not expect it to move up dramatically, but what is that business doing? What new products are they coming out with? What are they doing for their cash flow? I mean, all these important things. And people look at stocks. I just did a post on our newsletter about how investing short-term in classes, because that's what they do. You got a semester. It's a terrible idea, because who wins? The guy or the girl that picked the most hottest stock going up. It doesn't really teach anything. You've got to look at what you're buying and say, how old's your son?
14.
14. Say, where will that business be when you're 18 years old? Not where it'll be 2 months from now.
And I have heard, too, you should invest in businesses that you're interested in as well, right? Or an area that you know about, right? Because you'll understand it better?
Well, to some degree, but our portfolio is like 15 to 18 different companies, so you've got to have diversified. We have it in insurance companies, finance companies, food companies, transportation. So that's only for one thing. If you're going to build a portfolio that builds you wealth over the long term, you've got to have a diversified portfolio of businesses.
That was the nicest way I've been told I was wrong. Thank you, Brent. That's why we love having you on the show.
I love being here.
All right, thanks so much. We'll see you next week. Don't go anywhere. We'll be right back.